Well, the bears are certainly showing some strength after last week's close. So we don't know if that's going to continue or not, but we are getting really close to a change in the dynamic of the S&P 500. But before we get into that, we're going to go over the high level where we are in the U.S. equities markets, and then we'll get into this week's operating plan. So first things first that we always look at, we want to know, do we want to be involved in the U.S. or international markets, and then fixed income or equities? And this is what 12-month momentum tells us. So right now, since the S&P 500 is greatly outpacing the MSCI All World ex-USA Index and short-term treasuries, U.S. treasuries, we want to focus on the U.S. markets, the U.S. equity markets. From there, we break it down into style. Do we want to be large cap or do we want to be small cap? We want to focus right now on large cap. That dynamic changed about a week ago, and we started to rotate out of small cap and into large cap. And then we have growth versus value. Right now, growth is completely crushing value. There's no question about it. Growth is at least making new recent highs. Value is nowhere close to it, and it could be a major double top as far as value goes. So we'll see how that plays out. Now, when we add everything up together, we get our barometer reading, and that tells us, do we want to be risk on or risk off? So essentially, we want to know, do we take the buy signals or do we take the sell signals? Right now, we want to continue to take the buy signals. That's what the barometer is telling us. So we want to continue to focus on U.S. equities, take the buy signals, and then consider taking risk off of the table when we get those really strong sell signals. So with that, let's look at the chart of the S&P 500. And here's the S&P 500, down 0.97% for the week, almost a percent. And this was a sell trigger right here. This was a weak sell signal the week prior, and then last week we got a trigger which was trading below the prior week. So we did get a sell trigger. We did not take it, of course, because we are still bullish until one of these three things happen. We either break this bull channel, we fall back into the trading range, which effectively it looks like that might be the same. That could be this coming week here. We'll see. Or if we break above in a euphoric state. So any of those things, if any of those things happen, then we really got to be careful with the U.S. equities markets, because this could be a major turning point. Don't know if it will be or not. We shall see. But the bears certainly showed some strength last week, and we'll see if they can continue that into this week, since we're so close to breaking this bull channel, and then also falling back below support and within the most recent large trading range. We had a pretty active week in the portfolio last week. Really three main things. Number one, we rotated out of our small cap position and into our large cap. Now, we ended up selling all the small cap and then only buying half of the position in the large cap, and we did that to lower the overall risk of the portfolio. Secondly, we sold out of our treasury position. Interest rates spiked and we got stopped out. So it was a big week for treasuries and big week for interest rates, and we've been holding on to that thing for a while in that trading range that we've been talking about, and it fell to the downside. It was time to get out. And then finally, the dollar we did get a buy trigger on the dollar. And so we ended up purchasing half of the position on that one as well. And so again, to lower the overall risk of the portfolio as opposed to purchasing a full position. Now, the commodities positions that we've got, the two of those, one of them was up for the week and one was down for the week. We may get stopped out of one of the commodity positions last week because it's right down in the bottom of that trading range. So we're going to be watching that one really closely this week. And then as far as our U.S. equities positions, most of those they were down for the week. I mean, most of the markets were down for the week, except for a few. But at the end of the day, we're still look pretty good on those. If we start to get some more bearish price action, we'll probably adjust some of the stops up, and really just to take some risk off of the table to protect some profits. So we don't have any new buy signals. We don't have any buy signals this week or triggers that we could possibly take, and so we're going to hold on to our current holdings, maybe get stopped out of a commodities position, and then possibly adjust some stops up on our U.S. equities position. So with that, we're going to be watching really closely. Going to be an interesting week, and have a great week. We'll talk to you next time.